So, good afternoon, everyone. This is Anil Bhansali. I am the head of the Treasury and Executive Director in Finrex Treasury Advisors LLP. Uh, I'll give you a brief on the markets with particular reference to dollar rupee. What's happening in dollar rupee in the last, say, about 3 months, and what I think will happen in the future. Now, today we had the RBI monetary policy, which RBI maintained a balanced approach, and they did not give any particular guidance for interest rates in future. The the governor was a bit hawkish in his approach, and though he actually said that growth is going to go up to 7%, he yet said that inflation is still a problem, and we will surely keep guard on inflation, and therefore cutting of rates is not in question at present, at least. That's the inference from this RBI monetary policy. There was no complacency on the inflation, and growth target has been revised for GDP up to 7%. That was the basic outgo from the monetary policy. There are other points which I will take up as I move forward. Now, in the last few days, Asian currencies have all gained, with particular reference to CNH, which is our main competitor currency. The CNH has moved from 7.30 to about 7.15. Yet, dollar rupee has not been able to gain anything. Rupee has not been able to gain anything substantial in the past 3 months. It's been hovering just between 83 to 83.40. At 83.40, RBI has been selling dollars, and others are just buying dollars, and exporters are not present in the market for hedging forward. Now, US yields have also fallen significantly from about 5.02% to about 4.15%. Dollar index has fallen down from 107 to 103 was the low, recent low, and it's at about 103.50 in the current this one. Despite this, and despite a lot of flows, despite good growth of about 7.6% in GDP, and stock markets booming, FPIs getting in money in this month of November, we have not been able to see real gains for rupee. It might have opened somewhere around 83.05, yet it was the dollar was getting bought on every dips. And the main reason for this rupee not able to gain much is you would remember that in the COVID times, US had given a QE in the form of money being distributed all over the country, all over the world. So that QE is now being withdrawn by US, and that's causing a squeeze on the dollar. Most of the Asian countries, African countries, and South American countries do not have dollars to pay for their imports. So this squeeze is causing a lot of dollar buying from the market. Second, there is a cash dollar demand which is going on. If you go to a broker and give cash dollars, that is a physical $1,000, you will be getting a rate which is much higher than the interbank rate. This clearly indicates that there is a huge amount of cash demand going on in the market. Now, oil payments, particularly for Russia, has been one of the reasons, with Reliance continuously buying for paying oil, which it had taken from Russia, and in the form of rupees. Now that rupees had accumulated in the Vostro account, and therefore the Vostro account, the rupees which had accumulated there, it's now being passed on to Russia in the form of whatever currency they demand. There is also other oil companies which are buying for advance payment to Venezuela. We are now actually taking oil possibly from Venezuela, as US sanctions have come down on the country, and therefore we would be getting a good amount of oil from them at cheaper rates from the market. So we are making some advance payment to the country because they don't have dollars to our hard currency in their kitty. Then the importers are also continuously buying after they see that the dollar rupee is not coming down as it used to earlier. An up move always had a down move on the dollar rupee part, but this time we have not seen this dollar down move. It's moved just from a small range of 83 to 83.40 in the last say about 2 to 3 months. There has been a huge amount of ECB prepayment or maybe ECB redemptions happening, due to which again dollars are getting bought to pay these ECBs, because high US high interest rates have caused the this huge amount of redemptions in ECB. This was stated by RBI governor in one of his feedbacks. Then the importers have now become a bit panicky because they are not getting a better levels to buy, so they just have to pay their whatever dues are coming on the due dates. There is a constant buying by FPIs, which has been there. Recently FPIs have been investing into the country, but otherwise there has been a constant buying by FPIs, which has kept a dollar on the bid. Now, RBI has been selling at 83.39. Earlier, it was 83.25. Before that, it was 82.95. So all these three levels were being protected by RBI, and it is still continuing to protect. But how much time will it keep protecting? Nobody knows. It's RBI governor was on record today, and he candidly said that rupee has been relatively stable to most of the other currencies, and this is despite the elevated US yields and the stronger dollar. So RBI governor is also, happy that rupee is stable. I think even the FPIs would be happy that rupee is stable. It's not weakening. It's not going anywhere, doing nothing. Now, our reserves have also increased up to 604 billion, despite the fact that RBI has been selling dollars. Yet reserves have gone up because RBI may have utilized its outstanding purchased forward contracts. So those forward contracts would have come down, and RBI and the reserves would have gone up by that much. Now, what we think of for the next week is that we have today we have the NFPR in the evening, and in the next week we have the Fed monetary policy, FOMC, and then the BOE and ECB policies coming up. So all these things are going to affect the dollar. Maybe may not be the dollar rupee, but the dollar will surely be affected by this. Fed has been on a path of wait and watch situation, and they were saying that they would keep rates holding for a long time to come. Wait and be on a wait and watch situation as to how the data comes in future. The inflation in US has fallen down significantly from about 8.5% to about 2.5% recently, and therefore Fed is in a situation where it can possibly cut rates because high rates are affecting the growth of US. Though US has grown by 5.3% in the last quarter, speculation is that in the next year the growth will be very low, in the lower sides below 2%. So possibly Fed would be now more emphasized to look on the growth than on the inflation, which has been coming down continuously. So expect the dollar should be in general sold off, not just for next week, but maybe in 2024. So next week we see the dollar index, though hovering between 103 to 104, more towards the downside than on the upside. But accordingly, rupee will not be affected, because rupee, there is a lot of buying. The cash dollar demand is still there, and therefore we see the rupee to move between 83.25 to 83.45 in the next week, which will be dominated by these central bank meetings of the major countries. So expectation is that it will be range bound, and therefore any dips need to be bought by the importers, so that at least they get those 10 to 15 paisa. And any upticks, exporters can sell just for the near term. So, say cash, maybe a week, or maybe maximum, if they want to go, they can go for a month, because the dollar rupee premiums are so low that it's no use selling for a very long period, or maybe even for say 3 months or 6 months, medium term. So looking at the premium, we should be just selling for the near term, and keep watching how the market goes, how RBI protects the rupee, and how it allows upward movement or downward movement, whatever, on the dollar rupee part in the next week. So that's it. I sign off after giving this a bit of foreign exchange views, and we'll be back again next week to give the view for the next week, for the coming week after that. Thank you, everyone.